Let us concentrate on some more problems pertaining to national income. Actually, these problems are available in RTPs. See the first question there. Calculate net domestic product at factor cost from the following data. You have been given information pertaining to wages, mixed income, rent, salaries, interest, and profit. So whenever you are asked to calculate net domestic product at factor cost, factor incomes எல்லாத்தையும் add பண்ணாலே என்ன வந்துரும் நமக்கு net domestic net domestic product at factor cost can be computed. So what you are supposed to do, the compensation given to the employees by means of wages and salaries, operating a surplus like rent, interest, and profit, and of course the mixed income. When you add all these together, that is 7,142, 8,912 plus 541 plus 1,013 plus 714 plus 450, that results 18,772 crores. So this kind of problem will help you to understand how to compute net domestic product at factor cost. That is, we must add the amount given to employees, operating surplus plus mixed income. So in this case everything must be added. See the second part. Calculate personal income from the following data. You got undistributed profits of the corporation 50 crores. Net domestic product accruing to private sector, that is the actual income of the um, concerned sector, which is 700. Corporation tax 65. Net factor income from abroad NFIA is 10. Net current transfer from rest of the world 20. Net current transfer from the government 25. Interest on national debt is 40. See, whenever you are asked to compute personal income, the payments such as corporation tax and undistributed profits have to be eliminated, whereas that is from the total of all the incomes, that is income such as net domestic product accruing to the concerned sector, NFIA, current transfers from the government and current transfer from the rest of the world, of course interest income in respect of national debt. All these incomes have to be added together, and out of which the tax element, because to determine personal income, the payments such as tax and undistributed profits have to be eliminated. That's why here we must add the amount such as 700, 10, 20, 25, etc., even 40, but subsequently we have to deduct corporation tax of 65 and undistributed profits of corporation 50. So that results 680 crore rupees as the personal income. Sometimes you may get a question like this also. So using the information given in the table, calculate value added by firm A and firm B, GDP at market price, and NDP at factor cost. See, you have been given some details like sales by the second firm B to general, sorry, to send to general government. Then sales by the first firm A, sales by the second firm to households. The first one is the sale of firm B to the government. Second one is the general sales of A. Second one is third one is sales effected by B to the households. Then fourth item is change in stock of the first firm. Then change in stock of firm B. Opening stock of the firm B. Purchases effected by firm A. Indirect taxes paid by both of them. And of course consumption of fixed capital and sales made by firm A to B. That is from A to B, how much sales is effected. All these details are given. Based on that, you are asked to compute value added, GDP at market price, and net domestic product at factor cost. So first of all, we must find out the value added. of both the firms. Say in respect of the first firm A, the we have to consider the gross value of output of the first firm minus intermediate consumption. So for this purpose, we have to take into, that is, we must consider sales affected by firm A, and of course the change which has happened in respect of stock of that particular firm A, and minus, that is, intermediate consumption, that is purchases affected by the firm. So for this purpose, we have to add 1500 and 200 crores, and out of which the purchases value of 270 must be deducted. The result is 1430 crores, which is nothing but gross value added. Similarly, for B also the same formula can be applied. Gross value of output minus intermediate consumption. Here the sales affected by the firm is given, that is to the government, to the households, and closing stock and opening stocks are given. So to determine the change of stock, we have to find out the difference between opening and closing stock here. So sales is not directly given. It is given in the form of two items: sales affected to the government, sales to the households. So these items 300 and 1350 is the total sales affected by the firm B. Similarly, to find out change in stock, we must here the change in stock is not given directly. Therefore, closing minus opening is the difference or change, which is 10, minus purchases. Purchases affected by firm B is 300. So when you add together, that is 1350 plus 300 results 1650. The difference between 140 and 130 is 10, that must be added. So 1660 minus 300 results 1360 crore rupees, which is nothing but the value added of firm B. And when you are asked to determine GDP on the base of market price, we must add GDP is nothing but value added of all the firms. So just add value added affected by firm A and firm B, which is 1430 and 1360. That results to 2790 crore rupees. Then net domestic product at factor cost. See, to determine net domestic product at factor cost, we must take GDP at market price minus consumption of fixed capital minus indirect taxes of all the firms. Here GDP is 2790 minus the consumption of fixed capital is 720 minus indirect taxes paid is 375. One firm has paid, the other one has not paid here. So if you see the question, you can find out that it is a common aspect. Indirect taxes are given as a common aspect for all the that is for both the firms. Hence, such total can be taken directly. So the net result is 1695, which is nothing but NDP on the basis of factor cost. See, sometimes a problem may be asked on the basis of that is GDP. That is, you will be asked to calculate GDP on the basis of market prices, gross national income at market price, GDP on the basis of factor cost, and per capita gross national income at factor cost. So here you got some data like consumer expenditure 110 million, investment, government expenditure, exports, imports, net property income from abroad, transfer payments, indirect taxes, and of course the population. So when this kind of problem is asked, we must go for the calculations carefully, because it involves expenditure multiplier, and based on that the disposal income has to be computed first, and afterwards the national income can be computed. So these kind of problems you can refer. The next thing is who is taking care of measurement of national income in India. Actually, national accounts statistics. It is termed as national account statistics um, in respect of India, which is compiled by two different organizations or authorities, namely CSO, Central Statistics Office or organization, then Ministry of Statistics and Program Implementation, MOSPI. So the Department of Statistics and Program Implementation, Ministry of Statistics and Program Implementation, and CSO are taking care of the compilation of statistics pertaining to national accounts. And the estimates are generally published annually and also sometimes quarterly. And the practicality, um, actually the data given by these two organizations will act as a key source material pertaining to macroeconomic data of the nation, especially in India. And as per the mandate of the Fiscal Responsibility and Budget Management Act 2003, the Finance Ministry uses the GDP at current prices to determine the fiscal target. So fiscal targets fix பண்றதுக்கு எதை பேஸாக எடுத்துப்பாங்கன்னா இந்த national accounts published by CSO and Ministry of Statistics and Program Implementation will be considered.